In the last few months, the Dow Jones and the S&P 500 closed at record highs, but can the market really keep rising? Well, today we're joined by Dylan Bond. He's the owner of Bond Financial Services, and we're going to plan for 30 years without a paycheck, because that's these days what people have to deal with, the possibility that they could retire and have to plan 30 years of life without having a paycheck.
Yeah, I mean, one of the things you got to think about is that with life expectancies as long as they are now, if you retire at 62, which is early retirement age for Social Security, and you're a married couple, one of you has a better than 50% chance of living past 90.
That's a lot of time you have to figure in without a paycheck. So that's where you come in. People go to you and you help to navigate their future financially. Now, we've gotten back to where we were since 2008. What are some of the reasons why the stock markets are back to this level?
There's a lot of different reasons. I mean, factory activity has increased. There's been increased spending by both consumers and businesses. Obviously, low interest rates has been a factor in that, and also the housing market is picking up again. So there's a lot of different factors that are pushing the market to where it is today. The only thing is, obviously, there's no predictability in where the market's going to go from here. So we're working predominantly with people that are 50 and older. And what we're trying to get people to understand is, although it is exciting that the market is hitting new highs, it's very important that you adhere to a strategy that fits your personal situation and also your risk tolerances. Because a lot of people back in 2008, when the market took a nosedive and went down over 30%, they've spent the last 5.5 years just getting back to where they were five years ago. So,
well, and that's one of the common misconceptions. They're up, the Dow and the S&P, it's up at such high highs, so people think that everything's great, but in reality, we've gotten back to where we were in 2008. So essentially, we've invested for the last 5.5 years and made nothing.
Yeah, I mean, the average individual investor out there that was invested in passive stock mutual funds that basically ride the market trends up and down, a lot of them right now are just getting just back to or a little bit above break even from back in 2007. So again, now's a good time to revisit what you're doing. And learn about what's out there. There's a lot of developments in the financial services industry that give people at or near retirement a lot more options on how to manage their money. They can still have market exposure, but with some active management rather than just passive up and down passive management, which will just ride the long-term trends of the market. They can get more active management that isn't really benchmark driven. They're not trying to compete against the indexes themselves, but they're actually actively managing the money to try to reduce risk and volatility and maintain the potential for a reasonable rate of return.
Well, Dylan, as you were saying, it's important that you tweak your plan at least on a yearly basis. You meet with your clients yearly or more. And it's so important, too, because not only is the technology changing, not only are the things you can invest in changing, but as you age, you need to take less and less risk.
Absolutely. I mean, to break it down in the most simple form, a year ago today, the market was lower than it is today. So things are changing. So what we're talking about today isn't what we talked about last year. So we have to make changes year after year based on what's happening in people's lives. Are they retiring? Do they want to do more traveling? Do they want to gift money to the grandkids? Are they concerned about transferring assets at death to their grandkids and leaving big tax time bombs? There's a lot of things that as life goes on, even through that 30 years of retirement, that you still need to consider and talk about on a year-to-year basis.
Well, and as you age, too, you have less and less time to have risk in your life, so that if you invest and it doesn't work out and there's another 2008 situation, you could be in trouble if you put a lot of your nest egg into one type of investment.
Yeah, and again, history doesn't predict the future, as we know, but if you just look back over the last 10 years with the technology bubble at the beginning of the 2000 decade, and then the banking crisis that created the 2008 market decline, in the last 10 years, there's a lot of people out there that have gone through that scenario twice. And as you know, Seth, the definition of insanity is doing the same thing over and over and expecting a different result. So what we're trying to do is get out there and talk to as many people as we can and just simply educate them on what they have and what's out there and available to them so that they can make better decisions to help them.
And this month and next month, you're also doing that on the golf course, too. People can take in a bunch of golf, 18 holes, and have a fun chat with you.
Yeah, absolutely. We do, during the summer months, we do golf outings for people that are 50 and older and want to learn about what we do and how we think. This upcoming Monday, the 24th, we're going to have one at Twin Hills Country Club in Longmeadow, and then we have one coming up a little bit later in the month, or excuse me, in July, over at Crestview Country Club. And again, I talk for about 45 minutes, field any questions that are out there. We have breakfast, and then we turn them loose on the golf course for a round of golf. It works great for us. It works great for the people that attend, and they all walk out of there knowing more about us and what we're doing.
And Dylan, we're starting this new trend too, where people can always email you questions and we can try to answer them on the air too.
Yeah, absolutely. info@bondfinancialservices.net. If you have any questions or you want to touch base with us, you can simply send us an email, and we'll either address that on the air or get back to you.
Well, Dylan, pleasure having you here. And visit bondfinancialservices.net or give them a call, 413-754-4747. Just let Dylan and his staff take steps to secure your